You're listening to the Elder Law Hour. Welcome, Brittany Darling. I am so excited that you're here with me again on the show.
Hi, Emily.
And today we're going to have a rather large discussion about long-term care and how Medicare and Medicaid play into paying for long-term care, and really what the elder population and family members can expect when they are thinking about getting older and covering the expenses for long-term care.
Yep.
So
maybe a good place to start is let's define long-term care and why it's so important for families. And I say families because it is a family discussion. You know, if you have thoughts on what you want to happen, get your children involved early, and let's talk about why it's important to talk about the family really talking about planning for the future in long-term care.
Absolutely. You know, when people come to meet with me about estate planning, a lot of people, they want to get their documents in place and they know that they need to, you know, get their stuff in order, but a lot more and more people are coming to me and asking, hey, how do I plan to pay for long-term care? If someone, you know, has a diagnosis, especially with one of these chronic diseases that we're seeing more and more dementia, we're seeing more and more Alzheimer's, Parkinson's, things like that, even diabetes.
Mm-hmm.
You know, these kind of chronic conditions are really what triggers the need for long-term care. I mean, that's not the only reason that you need to plan for it, but it's becoming more and more prevalent. So a lot of people come to me saying, okay, hey, how can we plan for this? What does it look like? You know, what do I need to do? And so I kind of, you know, just want to open up with, there are different types of long-term care, and you know, the reason it's so important to plan for that is you really just don't know what's going to happen. You know, chronic illnesses, disabilities, cognitive impairments are really what we're seeing, you know, on the rise these days. So, you know, I'm sure everyone's kind of heard at this point of the silver tsunami, where it's a phenomenon where, you know, there's more people turning, you know, 65 nowadays than being born. And so the population is aging. The baby boomer population is, you know, it's growing rapidly. And so the need for long-term care services, you know, that the industry is growing rapidly. And certainly the quality of life, you know, for people is such a big factor in why we're doing this. You know, I saw the other day that Biden had introduced a new nursing home bill that's requiring there to be, you know, an RN, you know, spend, I think it was 15 or 20, maybe 20, even up to 25 minutes per day per patient in a nursing home. And of course, the industry is really not happy about all of these new requirements, but you know, the point of the legislation is to improve the quality of life for people. So it's really tricky because, you know, it's a tricky industry to be a part of because there's a lot of financial incentive to own these types of facilities, but you have to balance that with the quality of life and the quality of service that people are getting.
Absolutely.
So it's really, really tough. And of course, the other aspect to that is if you're not in a facility and you're at home and you have a caregiver, that's a very, very large responsibility for family members. You know, I've been watching this show on Netflix called, it's about the Blue Zones. I don't know if you've ever heard, if you're not familiar with what the Blue Zones are, it's these certain areas in the world that people live to 100, and it's they're quite isolated. You know, they have their own way of life. There's a documentary on Netflix right now about it, and the guy's really trying to figure out, you know, what is creating this longevity of life, and they have a very high quality of life.
They do.
You know, at a very old age. I mean, I think the one I watched last night, the guy was 100 years old, and he's riding a horse, and he's, you know, shepherding his cattle, at 100 years old, and he's just like hopping down off of his horse and just like, you know, everyday business, right? And I believe he was in Costa Rica. So there's all these different places in the world that are these blue zones. And one of the main factors of that was the family caregiving. So in these types of areas, that's really, really common. It's really prevalent that you stay at home and the family takes care of you, which is what everybody wants, right? That's the goal. That's the dream. However, one really important thing to note about those areas are there's not dementia. They don't have these cognitive diseases. So they are, you know, able to stay home. When you have something that impairs you mentally, it's really a different ball game. You know, I mean, physically, I can help, you know, grandma get up and down the stairs, or, you know, do these types of things. But when there's a mental disability or cognitive disability, it really creates a lot of hardship for the family members. So that's another, you know, really big topic. I mean, we could talk, you know, for days about how difficult, you know, caregiving is. And if you're listening and you are someone who has provided caregiving to someone, you'll completely understand how taxing it can be. So, you know, relief for caregivers is a very big subject that needs to be, you know, remembered and discussed with long-term care. And then, of course, like I was saying, preventing institutionalization. No one wants to go to a nursing home. I hear this from probably every single client that I meet with. Oh, we're not going to a nursing home. That's not going to happen. You know, everyone is very adamant about that. And because traditionally nursing homes have a terrible reputation for not taking care of their patients. So they have vastly improved in the past few years. There's been a lot of legislation, a lot of improvement within the industry, but there's still, obviously, there's always, you know,
I think there's just always that fear, you know, that I'm not going to be taken care of the way that my spouse would take care of me at home.
Of course.
And, you know, I know you've probably seen this too, Emily, but there's been the legislation and the leadership that's come through skilled nursing facilities have greatly improved. And I know we've got some great relationships with some great places around here that we could recommend at some point. Maybe that's a topic for a future show.
Absolutely.
But, you know, let's talk about the different types of long-term care, because I think when people think about long-term care, their mind just really goes to skilled nursing first.
Sure.
So maybe let's back up, because I know there are some steps that families can take before that to help their loved one at home, to keep them at home for as long as possible.
Yes, and that's generally the goal, is to stay at home as long as you possibly can, which is, you know, commonly known now as aging in place. That's what everybody wants to do. They want to stay home. They want to make their home as accessible as possible for their needs. You know, you're looking at maybe installing handrails, things like that. There's a lot of things that you can do that are small that can help out tremendously to make your home an easier place to grow old in. So home care, you know, is the goal for most people, to stay at home as long as they can. And that's, you know, usually they're going to need some assistance with daily activities such as bathing, dressing, meal preparation, but they can still remain in their homes. And that's, you know, that can be done by family members, or you can hire professional caregivers to come in and help out with things like that. And then the next level, let's just say, would be assisted living. In assisted living communities, you know, they're going to be where you have your own room. It's a little bit, most people are wanting to do an assisted living and not necessarily go to a nursing home if possible. But assisted living is going to be a little bit of it's not the same as a nursing home. It's going to They're going to offer you some personal care and some support services. So, medications, help with medications, help with food, meal preparation, stuff like that. But they're not going to be able to provide you skilled nursing care, which is where the nursing home comes in.
And I will say, in an assisted living community, and I'll call it a community because you talked about blue zones earlier. Mm-hmm. One of the things that they highlighted was that the sense of community and friendships were really part of what contributed to these blue zones too. And
yes.
Assisted living facilities really aim to get people out of that room and to play cards and do what they love. If they, some of them have gardens that you go out and you're using your body, you're using your mind, and that is contributing to really helping you have the best quality of life for as long as possible.
Absolutely. And I think they are trying to provide something that our society doesn't really have a whole lot of anymore, and that is that neighborhood community looking out for each other.
Yeah.
I think that, people, it's really sad that one of the, what was it? The number one, not complaint of people over 65, but it was the number one problem that they had was isolation. It was loneliness. And I think it's really, really difficult for people nowadays. Transportation's a big factor in that. I think that has kind of moved up the list. The AARP put out this great list about, what the problems that seniors are facing. And the number one is usually financial assistance. People are worried about not having enough money to cover bills, prescription medications, for instance, can be astronomical.
Yep.
So financial worries, was one of the probably the most prevalent. And then transportation. People, when you're at home and you're trying to age in place, you most likely aren't really driving a whole lot anymore.
That's right.
And so you're very isolated, and families, they don't really live in the communities like they used to. I'm just thinking of myself. I live 2.5 hours away from my family.
Yeah.
We don't really stay put nowadays. We're off. People travel. They are traveling for jobs. They're across the country. They really aren't around as much as they used to be. So that contributes a lot to the isolation, and also the transportation problem that people have is just getting out and about. So I can see the appeal of wanting to go to a retirement community or an assisted living, because you can have that community sort of built in, and mm-hmm. you have activities that you can do together. And certainly the research shows that really does help improve the quality of your life, and I would certainly agree with that.
Yeah.
And then of course we have nursing homes, and that's when you need skilled nursing care. So when and if your condition escalates, let's say, and you require more medical assistance, then an assisted living is not really going to be able to provide that type of care. So that's when typically you'll have to go into a nursing home. And then, the other places like assisted living or nursing home will have memory care. So memory care is going to be for individuals that have Alzheimer's, dementia, cognitive impairments like that, so that, there's a lot of safety precautions that have to be put in place for memory care. And then adult daycare, which is kind of a new thing that's going on right now.
It is.
It's exactly.
I think it would be really fun to work at a place like this.
Right?
I feel like you would hear so many amazing stories.
Oh, yes.
And I feel like I would just sit around and interview them all day long.
I know. I love hearing the stories, because everyone is. It's one thing that I think is really sad about our culture. I won't really comment on it a whole lot, but one thing that Americans do is really obsessed with youth. They're very obsessed with youth and being young and beautiful. But I think what's most beautiful is the intricate lives that our elder population have lived and how much change they've seen.
Yeah.
So there's so much wisdom that we can glean from our elders. And I grew up learning to, respect elders and showing that deference. And I think that is something that maybe has changed a little bit in the past couple of generations, but I'm hoping that maybe we'll get that back.
Yeah, absolutely.
But yes, adult daycare is essentially a daycare that offers supervised care and social activities for seniors during the day so that family members can go to work. It's just like a daycare for kids. It's geared for seniors. And so that's
Absolutely.
a really popular trend that has been coming about. And then of course our last service would be hospice care. And that's going to really be, it's end of life care, but I will say that I always, before I was really involved in this industry, thought of hospice care as just end of life care, but they really do a lot more
They do.
than that. And my own experience with hospice has been absolutely amazing. I think that, and I can't speak for everyone that works with hospice, but the individuals that I dealt with were fantastic, and I thought it was amazing. They provided comfort. They support the family, and that's a really, really nice thing. And then also, one of the nicest things that hospice did, I think, is in my personal situation, because when my mother passed, it happened slowly and then quickly. So I didn't really know. I know this sounds really silly, but when you're going through it, it's nice to know that as soon as it happens, as soon as they pass, you can just call hospice. They give you they give you so many instructions. They give you so much,
Support.
so much support, so much help. And so that was such a comfort just to know that they would take care of calling the funeral home, getting just all of the things that need to be done at that point in time so that you can just focus on your family, focus on yourself. So they are amazing, and they give you a lot of resources for your emotional well-being, which I think is really important too. And a lot of people don't really think about those, having that support from them, but I found it very comforting and very, very helpful. So, there's a lot of different types of services out there. Yeah.
Let's touch briefly on just the financial burdens that can come with the different types of long-term care. We know that here's the type of care, the level that's required, whether it's in-home care, assisted living, or nursing home. That's going to have a huge factor in how much this type of care costs.
Yes.
Geographic location is another big one. Where are you located in the country? Are you in an urban area?
Mm-hmm.
That's typically going to cost a little bit more.
Right.
And the duration of care. Are you someone that is going to need long-term care for an extended period? And that is so difficult to plan for.
It's so
ahead
difficult.
Of time.
Yes, absolutely.
But having these conversations up front and having a plan for, if this happens, this is how I will plan to pay for it, is super helpful for you and for your family.
Sure.
So let's talk about some strategies for long-term care, for financing long-term care.
So there are 3 ways to pay for long-term care. Out of pocket, meaning you just pay for it. Long-term care insurance.
Okay.
So that's going to be an insurance policy that you're going to have to get probably in your 50s for it to, for you to get qualified and actually get a policy. I mean, a lot of people try when it's too late. And I will say, the pros are that you can get coverage for up to 5 years and it will pay for your long-term care, and it's wonderful. But the cons are that the premiums can increase. And I had this conversation a couple of days ago with a client that their premiums they keep going up every year. And he has a history of Alzheimer's in his family, so he certainly doesn't want to discontinue his coverage, but it hasn't happened yet. So he keeps, keeps the long-term care insurance in place, but they are really paying for that now, more and more. I think I want to say his alone is like $4,000 a year or something like that. It can be quite expensive. I'm not saying that's a general price for it, but for him, it keeps going up and up. And so that was something that we were kind of looking into. And then the third way to cover it is Medicaid. And that's a needs-based government program that is sort of the last resort. Medicaid is designed for people that can't afford to pay for their health insurance on their own. And we're going to get into more of that in just a little bit. But those are the basic three ways that you pay for long-term care. And I think the biggest, it's really, really hard to know how long it's going to be. I mean, for him, let's go back to my client, okay? His family members had Alzheimer's. With Alzheimer's in particular, that disease can last a very long time. And physically, you can be fine and live with it. Mentally, you can't remember your family members, you can't remember things, but you don't physically decline the way you do with other diseases. It depends, like I'm kind of generalizing, but some diseases, you'll decline quicker and, lose your ability to even, eat and swallow and things like that. So that's incredibly difficult to plan for. And all we can do is kind of go over those three options, when we sit down and meet and talk about, well, how much savings do you have? How do you have long-term care insurance in place? Are you someone that we could possibly get qualified for Medicaid? There are ethical and legal ways to qualify for Medicaid without losing all of your money. And we'll get into that. But I just wanted to say a couple of statistics that are kind of alarming.
Okay.
Is someone turning 65 today has almost a 70% chance of needing some type of long-term care service.
Oh, wow.
So that's a very large amount of the population. And just as an average, women need longer care because they live longer, generally. So the average for long-term care for women is now 3.7 years, which I thought sounded like a long time, because I'm used to giving out the statistic to people that the average nursing home stay is, I believe it's 28 months. And that's just a general, like throughout the country, kind of, very general statement. But, and this may not be, 3.7 years, she may not be in the nursing home this whole time, but that's a long time. That's a long time to need care, though.
It is.
And for men, the average is 2.2 years.
Okay.
So that's still a very long time to need services, of this nature, because they can be quite expensive.
They can be.
Having said that, why don't we talk a little bit about Medicare?
Okay.
Because one of the big misconceptions that I see with people is thinking that Medicare covers long-term care, and that's not true.
Wait, it doesn't?
It does not cover long-term care. So it's Medicare is really a program, as we all know. I mean, we've all heard of Medicare, okay? So we know it's insurance for people 65 and older, right? You have to have paid into the system, to get it. But it doesn't cover long-term care. It only covers a little bit. It's just not, so it really isn't cut out. The system isn't really cut out to do that. It's more, well, first of all, there's the different parts to it. There's part A, and that's going to be your hospital care, okay? That's going to be inpatient hospital care, some hospice care, some home health, and some skilled nursing facilities, but only in certain situations, okay? And then you're going to have part B, And this is your medical insurance. Now that's going to be doctor's visits, outpatient care, any preventative services that you're going to need, and medical equipment and stuff like that. And you actually will pay, premiums for that. And people think, I'll get into some other misconceptions about Medicare in a minute, but then you have Part C, and that's the Medicare Advantage. That is actually offered through private insurance companies. So that's that's not original Medicare. That's going to be something that's offered through private insurance. And then Part D is your prescription coverage. Okay. So that's, those are the 4 parts of Medicare. And the only long-term, it's really designed to cover short-term care. Okay. It's not designed to cover long-term care, which is going to be when you're in it doesn't cover assisted living. It doesn't cover long-term care in a nursing facility. So,
all right. So how do you qualify? Who's eligible for Medicare? Part A, Part B, Part C, Part D, all of these different parts.
So you need to be 65 or older.
Okay.
You have to be a U.S. citizen, or a resident. And you actually have to have worked and paid Medicare taxes for at least 10 years, or your spouse has had to. So you do have to pay into the system to be eligible for Medicare. And then there's some other situations with younger people that have certain disabilities. But for the most part, and what we're kind of talking about is, those that are 65, and older. So one thing I just want to talk about with Medicare too is there are a lot of misconceptions about it. And the number one thing I think is that everyone thinks Medicare is just going to cover everything. And they think it's completely comprehensive. But in reality, it doesn't cover everything. You have gaps in that coverage, which is going to be dental. It's not going to cover vision. It's not going to cover hearing. And most importantly, it doesn't cover long-term care like we're talking about. So, it's something to keep in mind that this isn't going to be as comprehensive as maybe you think it's going to be if you're just now, getting qualified or thinking about, when you're going to enroll in Medicare. The other thing is, it's not free. So you're going to have a premium when you have Part B and Part D. You're going to pay a monthly premium, and there's going to be deductibles, and there's going to be co-payments for that. So that's something else to remember. The other thing about it is you can't just enroll. You're not automatically enrolled most of the time, and you can't enroll anytime you feel like it. There's going to be the initial enrollment period where you need to enroll in Medicare, and that's usually going to be 3 months before your 65th birthday. So
yeah, I was surprised to see that you have to plan ahead. It doesn't automatically happen for you.
It doesn't automatically happen. You have to manually do that in most cases. There are some, really, some cases that you automatically get enrolled, but I mean, it's very, that's just super specific to people that most likely are not listening to it at the moment. But so anyway, getting back to the long-term care costs, and most people think if you need nursing home, Medicare covers that. And that's unfortunately not true. The only way, I'll go over when Medicare actually covers long-term care. Okay. First of all, it'll only cover up to 100 days. And that is if you have been in the hospital. So here's a typical scenario. Someone has had a fall, okay? This is just a really typical kind of case study that I see. Someone's had a fall and they've been admitted to the hospital. Now you have to have been in the hospital for at least 3 nights, all right? And then the other way it covers it is if you've been in the hospital for 3 nights, you're admitted to a Medicare certified nursing facility within 30 days of your hospital stay. And you need skilled care such as, nursing services, physical therapy, or other types of therapy. And if you meet all 3 of those conditions, then Medicare will pay some of your costs for up to 100 days, okay? So for the first 20 days, Medicare, I believe, pays 100%. But then days 21 through 30, and this is a big, shock, you have a copay of $200 per day. So when I say it covers up to 100 days, I don't mean 100% of those 100 days. So
Okay.
that can be quite costly. But after the 100 days, that's it. So it's really, if you keep in mind that Medicare is meant for rehabilitation, short-term care, things like that, it's going to cut you off. And so then it's like, then what? And that's really
Right.
what people are really surprised about, because it's not really discussed a whole lot, that you aren't going to be covered for something if it's medically necessary. And it's a big aha moment for a lot of people in a very bad way.
That's right.
So yes, so it can be, Medicare is great, it's going to be great coverage for you, but just keep in mind, there are gaps in that coverage. It's not free, and it's not going to cover long-term care. So I think that's kind of the gist of Medicare as far as our discussion for long-term care that we're talking about today. But yeah, so the other way that we can pay for it is with Medicaid.
Absolutely. So maybe some people think that Medicare and Medicaid are the same thing.
I hate that
But
they're
we
named
know-
so closely together, because
But we know
it's
that
so
they're
confusing.
not. It is
Yes,
confusing. It's very
so confusing. People think it's the same thing.
They do. So, let's highlight a couple ways that Medicaid is different from Medicare
Sure.
to start off.
Absolutely. Well, so Medicaid is often the last resort health insurance for people. It's going to be a needs-based program, meaning that you have to be within a certain income and asset level to qualify for Medicaid. Okay, so it's kind of the safety net for people who can't afford private health insurance. But for long-term care, it's really a very, very, very large factor in the system. It's I'm sure the biggest payer of long-term care services for nursing home and community-based services, because there's, at the end of life, a lot of people, they just can't afford long-term care. It can be so expensive. In fact, I have a client that sent me her bill yesterday. Her husband is in a nursing facility. He has dementia, and it is costing $12,550 a month. And he's been in there.
Wow.
Yeah, her total bill is over $105,000 right now, is what the total has been. He's been in there since December, and it's already over $100,000. It can be quite expensive. So, how do you pay for that? And this, I'll give you this scenario for them, okay? She came to me about, I think, like a year and a half ago, and said, okay, I'm married. My husband's had dementia for a long time. I've been caring for him at home, but we've always had our finances separate, and she had about $200,000 of savings for herself, and he really didn't have a whole lot of anything for himself. He has a small IRA, very small IRA, and they've always lived in her house. This is a second marriage, so they lived in her house. They don't have children together, but they have been married for quite a long time. Well, for her, she is healthy, and she is 85, but she's healthy. She can drive. She takes care of herself. She doesn't have any problems with medically or cognitively with doing anything. So she has a couple $100,000 for herself that she wants to keep for herself for the rest of her life. That's not a whole lot of money, okay?
No, when you're talking about $12,000 a month for skilled nursing, that can go very quickly.
It can go very, very quickly. So the plan for her is, how can I save my money for myself and also get his nursing home paid for? And that's really, this is a very typical scenario that I see. You know, a lot of people, they work hard their whole lives. They save, they do everything right, and they have their nest egg, and then they're looking at something like this that's going to just
wipe it out
completely. So luckily there are things that we can do, and there are methods that I have employed that we've used for her, that have, you know, we've been able to save her money. And hopefully I say we've been able to, because we are still in the process of getting him qualified for Medicaid, because believe it or not, we are September?
Mm-hmm.
And so we've been going through this process for 9 months. I applied for him in January, and sometimes, folks, this is how long it takes to get qualified for Medicaid.
So moral of the story is to start early. Before you need it.
Yes, certainly start your planning before you need it, because it's going to take a long, long time to get actually qualified. So the way Medicaid works is, it's a federal program, but it's also a state program. So DCF, which is the Department of Children and Families, they run the application process. There's a lot of different agencies involved. It can be kind of confusing, but DCF handles the applications. Okay, so you apply through DCF, and then they assign someone. And there's a lot of there's a lot of red tape. There's a lot of delay. There's just these, you know, the DCF workers, they're doing their best. They have a ton of applications. So, you know, they work through them as they can, but I'm telling you, it takes months and months and months. So be prepared for that, because I think that's the biggest frustration that people have. And you know, even though I can tell you that, waiting 9 months and getting a $100,000 bill in the mail is still quite disconcerting. So it can be very frustrating and very scary. So just know that it's going to be a process. So speaking of the process, we can talk about eligibility for
Okay.
Medicaid, because as I said, it's a needs-based program, and with Medicaid, this is a little bit scary, but you can only, the asset requirement is you have to basically have less than $2,000, and which is, you know, that's not a whole lot of people that have less than $2,000.
Now, is that $2,000 total? Is that an amount that they look out for, like a checking account or like a savings account?
Certainly in a bank account, yes. You can't have more than $2,000. So it's kind of confusing, because Medicaid has what's called countable assets and then non-countable assets. So for instance, let's just say an IRA, okay? You would think that's an asset, right? Let's say I have a $100,000 IRA. Well, surely Medicaid looks at that and says, that's $100,000 that you can use to pay for your care. Well, that's true, unless the IRA is actually in distribution. So if the key to remembering an IRA not being counted as a countable asset is that it is the required minimum distribution is being distributed. Okay, so like my client that I was just talking about, he has a small IRA, and it's in RMD status, which is kind of there's a lot of alphabet soup when it comes to Medicaid and long-term care, but so the required minimum distribution is being paid out to him He gets his annually, so it's like once a year. It could be monthly, it could be annually, but that's something that you're going to have to prove to them. Okay, so when you apply for Medicaid, you give them a lot of documentation.
Okay.
Like everything, everything that you've ever, everything that you own. We have to prove that your house, doesn't exceed the limit. And I think it's like 688. I'm trying to think of what it is this year. Yeah, 688,000 is your limit to how much your house can be worth. So if you have equity that exceeds 688,000, which is a real issue for people in Florida now because our property values keep going up.
Skyrocketed.
I know.
So that's not difficult to hit if you live in the Jacksonville area.
No, I mean, it certainly can affect quite a few people in Florida nowadays. I mean, if you bought your house 30, 40 years ago, you've stayed in there, it's worth quite a bit of money now. I mean, we've all seen a lot of property value increases in the past, especially in the past 3 years. It's been a little nutty. But anyway, so a little bit more about the eligibility for Medicaid. So you do have to be 65, you do have to be a citizen, you do have to be a Florida resident. Now, let's talk about your income. And I want to stress here, your gross monthly income cannot exceed $2,742 a month. All right, that's really easy to hit if you have an IRA being distributed, if you have Social Security, if you have maybe a pension, something like that. You can't, if you're applying for Medicaid, this doesn't apply to your spouse, okay? So I'm just saying the person who needs to go into the facility. Your monthly income, your gross monthly income cannot exceed $2,742 a month. Now, that is to say, if it does exceed $2,742 a month, then of course there is a way around that. Because as elder law attorneys, we have created a lot of wonderful tools for people that are completely ethical, legal to use. And let's say you have more income than that, Brittany. Let's say you've got a really good retirement and your income exceeds that minimum amount, or maximum amount rather. Well, what we could do is set up a trust, and we call it a QUIT, and it's a qualified income trust. And I just did this for a client of mine last month. She had, it was, oh my gosh, it was over the limit by not much at all. So we had to set up a qualified income trust, a QUIT, and that captures the excess income. And that money can never be used, can never be seen, by the family. That whatever money is going to accumulate in that account just goes to the state afterwards. So that's, just in a nutshell, that's kind of how that works. But there are ways, around the income requirements. So keep that in mind. In Florida, we're really lucky. We have a lot of really good strategies that we can use. We have a lot of tools. There's some just really great pioneer attorneys that have worked in this field that have created a lot of wonderful tools for us to use when it comes to this, because it's so needed. So I'm very grateful for that. In a lot of ways, it's a lot easier for us in Florida than in other states. So that's a bright spot. But yeah, so the asset requirements are going to be, less than $2,000. And then the other thing to think about is if it's a married couple, the spouse that's not applying is called the community spouse. So the community spouse is, quote, allowed to have $148,620 in countable assets, which is not very much money when you think about my clients that, are going through this. So what we did, instead of her spending down that $50,000, we employed a different strategy for her. And that strategy, I'll get to, what all kind of a rundown of all the strategies that we can use, but for her, we invoked the spousal refusal. And that's where you can refuse to pay for your spouse's long-term care. So it sounds kind of, people, feathers get a little ruffled when you say, I'm refusing to pay, but you're doing it for this reason, because she is in good health. She needs the money. She doesn't have a lot of, $200,000 is not a, great deal of money to support her for the rest of her life. So,
Yeah.
So that's one strategy that we can use in Florida. And I like it, because if you want to keep more than 148,000, and she's just going to need more than that. She's going to live, I feel like she's going to live a very long time. She's very healthy. So it's that's one strategy that we can use. So the other, we can talk a little bit about, about assets as well. So when you're looking to get qualified, I'll say what some non-countable, assets are, because Medicaid is needs-based, okay? So you can only have $2,000, like I said, in countable assets. The community spouse is allowed to have $148,620 in countable assets. So if both spouses need to be institutionalized, only $3,000 in countable assets is allowed between them. So that's, really,
It's not a lot.
it's nothing. It's really, really, that's difficult. So the homestead, we'll say, is not countable unless it is over that $688,000 limit. So that's going to be, it's not going to cover, a lot of people, but that can affect some people in Florida nowadays, because our property values are getting up there. So a few other non-countable assets are going to be, you can have a car, and it can be, you have one car of unlimited value, all right? And then you can have a second car that's over 7 years old, and it's not a collectible. So that's fine too. And then funeral plots, irrevocable prepaid burial policies, and it's important that they're irrevocable. I just want to touch on that, because when it comes to Medicaid, you really can't have anything that is going to, that you can get a refund on, let's say. So if you prepaid something, and you can get the money back, then they're going to count that against you, all right? So I always say, if you're going to do a prepaid burial, make sure that it's irrevocable, that you can't take it back, because otherwise that's going to count against you. And then you can have $2,500 set aside for burial, and if you have any life insurance policies, they have to have a face value of less than $2,500. So can't really be a whole lot there. The other thing that's really important to note on countable assets is just looking at bank accounts. A lot of times, how we were talking last week about bank accounts where you put someone entitled jointly with you. Well, you would think, okay, if you're just looking at it and you say, well, I have a bank account with my daughter, and so that she can pay the bills, whatever, there's $10,000 in it. So $5,000 should be mine, right? And $5,000 should be hers. Like you would think it's both of ours, whatever. No, that's not how Medicaid does it. They say if you have it, they don't care how many people are jointly on the account. It is all attributed to you. So that's going to be 100% your account. It's not going to, they're not going to divide it up and say, oh, well, so-and-so's on there too, so let's 50-50 it. No, it's going to be 100%, your account. So that's something that's really important to note. So the question everyone probably wants to know is, how can we get around? What can we do to get long-term care paid for and qualified for Medicaid without spending down all of our money. So that's, well, speaking of spending down, even if you are spending down, there's going to be a little bit of restrictions on that. So everyone knows, or most people are aware, that when you qualify or you're applying for Medicaid, there's what's called a 5-year look back.
I was just going to ask what that time period was.
So there's a 5-year period of time that, and this kind of goes to our point earlier about why planning is so important ahead of time, because if you wait until you need it, then you're in crisis. And we can still do a lot of things then, but if you can plan ahead of time, it's so much easier. So there's a 5-year look back period where if you have transferred any assets within that 5-year period, that has to be disclosed. They will find out, and you'll go through a penalty period for that.
So who are we talking transferred to? Like, who, when you're talking about transferring assets, is this to friends? Is this to family?
Yes, it's to anyone, basically. So the key to the asset transfer is that they don't want to see that you've made any gifts, okay? So they don't want to see that, oh, I'm just going to give my kids $100,000 so that I can qualify for Medicaid the next day, because I don't want to spend my money. That's not really how it works. So the key to this type of planning, especially within that 5-year time frame, is what I try to tell people to think about is fair market value. Okay, if you are going to engage in any financial transaction, it really needs to be for fair market value. They're not going to allow you to sell your house for $50, to your children.
Okay.
Right?
Yeah.
You can say, oh, well, I'm not gifting it because they bought it for my $500,000 house for $100,000. No, that's not going to work. The key is always going to be fair market value, and you're going to need to prove that. So keep that in mind when you are transferring any assets or thinking about transferring any assets. Fair market value is the key for that. Now, if you are going to use some of your money you can use some of the money to spend down debts, for instance. Like if you have any credit cards, if you have your mortgage, you have a car loan, something like that,
right.
You can use the money to pay off debts. That's absolutely fine. You can buy a car. You can, like we were talking about, those irrevocable burial or funeral contracts. We can certainly do that. You can prepay for, funeral. And also another thing that a lot of people do is they make improvements to the house. And I say, even if you want to buy like a great chair, like a comfortable chair, or a more comfortable bed, something like that, anything that's going to help you, with your personal care or anything like that is completely fine. So those are not going to be gifts or transfers for Medicaid purposes. So, that's fine. But like I said, just make sure that if you are going to pay for anything in advance, that it can't be refunded. So you can't pay, like rent. If you're renting and you don't own your home, let's say, well, I want to go ahead and pay the whole year rent in advance. No, you can't do that. So
because if you move, the theory is that you would get a prorated amount back, and so Medicaid would look at that as a refundable payment.
Exactly.
Okay.
Exactly. So don't pay anything in advance because that can create an issue for you. All right. And then I think just lastly, I'll just go over, a few legal ways to protect your assets. And, there's, like I said, in Florida, we have a lot of good strategies. Spousal refusal is one of those. I've employed that for clients before, where you fill out some documents saying you refuse to pay. One little note that I'm not going to get really into today, obviously, because we're almost out of time, but one thing that I do want to stress is if you're invoking something like spousal refusal where you have no intention of paying for the long-term care of your spouse, it sounds a little, sounds a little icky, but there's we have our reasons for that. Make sure when you sign that admissions agreement with your nursing home, you make sure you are signing it as power of attorney for your loved one, and be very, very careful of what you sign. There's a lot of practices nowadays where nursing home agreements will have you sign as a responsible party and still try to collect from you. This is a very big issue. I've seen this, unfortunately, more than once. So I've had to advise clients to send, first of all, send your attorney the agreement before you sign anything. And if, hopefully, get it looked at, make sure you're signing what you need to sign, because if you're going to be on the hook for $200,000 or $300,000, you really need to know about that. So there's a lot of stuff that happens with the admissions people in nursing homes, and I don't mean to bash them at all, but their tactics can be a little pushy, and they will have you sign as responsible party. This is a really big issue, and this has come up for a client of mine, unfortunately. But anyway, so spousal refusal is one of the methods that we use. Another one that I use quite a bit is called a personal services contract. And these are really popular in Canada, by the way. And we don't really use them a lot in this country. Well, we do in the Medicaid, context, but so basically what you're saying is in Canada, and they really encourage this, that you employ your family members or your caregivers and you pay them to take care of you so that you have someone that will take care of you, right? And it's a contract, it's a legally binding contract. And with the way we use it, yeah, it sounds a little strange because, again, these methods tend to ruffle feathers when you first hear about them because you think, it's funny, my next door neighbor had one of these, and so that her mother could qualify, she was being paid to take care of her mother. She was the only one around. The sisters were across the country. She handled everything for her mother for 2 or 3 years.
Yeah.
Okay. And she didn't work anymore. So anyway, she was being paid out through a personal services contract to do that. And it's also called a family caregiver agreement. The two are, interchangeable. And the key to that being, again, fair market value. So I employed one of these for some clients. They were taking care of their mom just around the clock. I mean, it was literally 24 hours a day that she needed care. She has dementia. She's now in a nursing home, but they kept her home as long as they could. And she had some money. There was, money that we needed to employ. So we used that money and created a personal services contract, and were able to pay the family members for her care so that she could then qualify for Medicaid. And it's a great way to, to use the money to, so that it's not being lost, and that the family actually, then receives that money. But then you also get to qualify for Medicaid because, who knows how long she's going to need that long-term care. It could be years, Mm-hmm. So there's a lot of really great ways. Just, one other way that you can pay for it is called income producing property, like rental property. So I think that's kind of a funny exception in the Medicaid rules, but we'll get more into that probably on another episode. But so, as you can see, the system is complex. It's really hard to navigate, and I hope to really delve into it a lot more in the future. So thank you so much, Brittany, for helping us out today and talking about long-term care. You have been listening to the Elder Law Hour with Emily Hicks, and we will catch you at elderlawhour.com for more information about this and other topics. Thank you.